Let's talk about the latest market update. The holiday season has arrived, and as long as I've lived in San Diego, it'll still be strange to see Santa Claus on surfboards in front of people's houses and Christmas lights on palm trees. Strange, but I love it. Not having to shovel the snow, that's always a great thing. I can see people are making more time for family and friends, so naturally, real estate takes a back seat as people focus on the current holiday. Starting just before Thanksgiving, the housing market slowed down quite a bit, transitioning from the autumn market to the quieter holiday market. Inventory and buyer activity tend to drop, and this pattern holds steady year after year, no matter what's happening with the economy. Many people put their real estate plans on hold until after the new year, which is when you'll start seeing more and more for sale signs in the neighborhood. Last year, we saw an inventory peak in November at just 3,000 homes, one of the lowest November levels since 2012. By early January, it dropped by 22%, which is right with the typical seasonal slowdown we've seen in the past. The holiday market has officially arrived, bringing the slowest time of year for real estate in San Diego. Although it's not as slow as other parts of the country due to our amazing weather that we have year-round. Though with all the festive distractions taking center stage, fewer sellers are listing their homes and, well, they want to wait until the new year. In fact, December typically sees 59% fewer new homes come onto the marketplace compared to April and May, the peak listing months. Last year, over 1,700 homes were pulled from the market in November and in December. And this year, we're likely to see the same trends come around. Right now, active inventory sits at about 4,500 homes or so, which is actually great. It's 52% higher than this time last year, but still below pre-COVID levels, which averaged about 6,270 odd homes. Inventory will continue to decline as the year wraps up, leaving us with about 3,000 active listings at the start of 2025, similar to the beginning of 2023. And then, of course, on the demand side, some buyers are pausing their home searches. Well, they want to enjoy the season as well. Last year, pending sales dropped 20% from November to early January. Today's demand is slightly stronger at 1,605 pending sales. That's up 20% from last year, but it's expected to decline further until the new year as well. In my opinion, it's actually a great time to put your home on the market to sell because you have less competition from other sellers. And yes, although buyers are kind of standing on the sidelines because of the holidays, they're still searching. They're scrolling on their phone and they're looking. So when a good property comes on the market, they are ready to jump in and go see that home and make offers. Despite these shifts, let's talk about the expected market time, and that's how quickly homes are selling. It remains steady thanks to the balance between falling inventory and the demand. The pattern has held since 2020, unlike pre-pandemic years when market time increased more significantly during the holidays. In short, people just want to have a good time during the holiday. The inventory shortage does still remain a challenge, and the housing market will likely kick off in 2025, much like it did last year. Many homeowners are staying put. They're holding on to their low fixed rate mortgages as current rates are near 7%. In October, San Diego County saw 3,078 new listings, a 29% drop from pre-COVID averages, but an improvement from last year's October's 2,471. Now let's talk about the demand and market time. Demand remains unchanged at 1,605 pending sales with affordability constraints limiting the buyer activity. As the holiday continues and rates stay high, demand is expected to decline. The expected market time has dipped slightly to 85 days. That's slower than last year's 67 days and the pre-COVID average of 76 days. Now for the luxury market update, and that's anything over 2 million. It's gaining momentum. The inventory dipped to 811 homes while the demand rose up 22% to 164 pending sales. This reduced the expected market time from 183 days to 148 days. Higher price points also saw improvements. That's 2 million to 4 million. The market time dropped to 120 days. And for those homes 6 million and above, market time fell significantly to 527 days. Year over year, luxury demand is up 41%, supported by the strong Wall Street performance. While the overall market slows, the luxury market segment is showing some signs of life. And there you go. If you have any questions regarding the San Diego real estate market, feel free to reach out to us. We're here to help.